Hey guys, welcome to today's video. It's February 17th and I wanted to do something a little different this month. We're going to start to try out the idea of a middle of the month update just to give you guys a perspective on what's changed between our monthly newsletters that we put out and kind of the update on the market in the middle of the month. What's the news saying? What's happening with Bank of Canada? Any updates? And today's is great because we're going to jump in. There's some fantastic articles for you guys to read. All the links are included in the monthly newsletter. And if you're not signed up to our monthly newsletter, you can drop a comment below. We'll send you a link, or you can go to jakenicolle.com, NICOLLE.com, and click anywhere, enter in your information to see a property, and you'll be included in our monthly newsletter. So, diving in today, here's a couple things that I want to talk about. There are some fantastic articles for you guys to be going through. And the reason I'm filming this again is just that I really believe it's worthwhile for us to spend a little bit of time looking at what's happening in the market. So there's a fantastic article that's come out from the Canadian Real Estate Association. So they look across all of Canada, not just in the Greater Toronto area. They're looking at Vancouver. They're looking all through the East Coast as well. And here's the big thing. So home sales starting off this year are at a 14-year low. This doesn't mean home prices. It means the amount of sales actually happening. So I'll let you guys go through these articles. I've got my notes summarized over here. And here's what we're looking at. As it says, Canadian home sales, they started this year 2023 at a 14-year low. And the actual, not seasonally adjusted, number of transactions in 2023 came in 37% below the second best January ever in 2022. So compared to last year, January 2022, the number of transactions is 37% below. Okay. And then January 2023 sales figure was the lowest for that month since 2009. So this is the fewest number of sales we've had since 2009. You can see this graph down here where it shows in 2009 we had a really low volume of sales, and then we're over here with a really low volume of monthly home sales. Okay, so it says actual monthly sales activity. So again, not sales price, just the amount of sales happening is below that number. It's the same info there. The actual national average price is 18% below what it was last year. Okay, so some really quick stats to just give you perspective. And I'm going to share at the end of this video, I actually have some homes that I'm going to show you guys just how real the change in prices is by showing you some real life examples. All right, the next article over here is titled Canada's housing market just had the worst January since 2009. All right. And it echoes a lot of the same sentiments. This was written February 15th, just a couple days ago from the time that I'm recording this. And you can see here, this shows how much home sales, again, the number of sales, unit sales, has dropped. So it's dropped 37% year over year, okay? Which is pretty significant. Keep in mind, February of last year, meaning pretty much a year ago from right now, was the very peak of the market in 2022. January was climbing and February was very much the peak. And then it says here, prices meanwhile also declined in January, with the MLS home price index down 1.9% for December and 12.6% from the year before. Okay. Heading into the important spring season, we'll see who's more eager to make a deal, sellers or buyers. Our bet is on the former, so they're betting that sellers are going to be more eager to create a deal because of the affordability. Okay, next article that's interesting for perspective. Toronto home sales forecast to fall to level not seen in 2 decades. All right, so the article here is essentially saying that what we just experienced is the most hikes we've seen since 1980. All right. It's a lot of hikes in the last, last 12 months. We've essentially hiked the rate like 8 times. All right, so a lot of times. And we've gone up 4.25% at the key rate, so huge change. And anticipating 6 to 12 months of stable rates, not lowering. So this is probably the most important thing. There's still a lot of conversation that I'm hearing where people are anticipating, they're hoping, I should say, sellers are hoping that the market's suddenly going to bounce back and that interest rates are going to come down. Here's some perspective from the Bank of Canada, where this is going back to their January 25th announcement. And you can read this, I'll leave all the links there. But at the bottom, they wrote, inflation is projected to come down significantly this year in 2023. Lower energy prices, improvements in global supply conditions, and the effects of higher interest rates on demand are expected to bring inflation down to around 3% and in the middle of this year and back to the 2% target in 2024. Remember, they're not going to change anything until we hit that target. And I don't think that they're going to race to lower interest rates once we hit this target. So what are they saying? They're saying they expect that by 2024, we'll start to be in and around that 2% target. That means they're not going to change interest rates, okay? And they're deciding now, heading into their next announcement, will they raise it maybe even one more time? All right, so really good perspective. And this is what this article continues to say. Getting more calls for clients looking for pre-approvals. So they think that the buying is going to pick up a little bit more. And the hope is that home prices will remain, if not go up a little bit. So the anticipation from this article is that maybe home prices will go up a little bit. I don't know that I agree with that, but at the same time, it doesn't take much for market sentiment to change. I'm just not convinced that home prices will start going up right away. I think we're going to be in a little bit of a period of fear and concern of trying to avoid bidding wars, avoid overpaying for stuff, because we're seeing very high interest rates right now relative to what we've been experiencing during the craziness of, this time right here. Okay. All right. So a couple other takeaways from this. The group's market outlook released on February 10th said home sales will decrease to a total of 70,000 sales, which is down from 75,000 in 2022. So they think we're going to have less sales, about 5,000 less sales this year of home sales. And the total would be the lowest tracked on the Toronto Real Estate Board since 2001. So what they're saying is, since about the time over here, 2001, none of these graphs show 2001, but since 2001, they're saying this would be the fewest number of sales we've had since then, where they had 67,000 sales that year. So Toronto Real Estate Board's chief market analyst, Jason Mercer, said it will be a year of two halves in 2023. He said that the flatlining of sales and average selling prices suggest we've reached a bit of a bottom in the market. So what he's anticipating is that the market will bottom out this year and then maybe start to come back up a little bit. So we shall see, right? Because if people get comfortable with interest rates and they get a little bit more like, okay, I'm ready to go out and spend, they'll go out and buy and lock in those rates. But you got to keep in mind that we've come off this pretty traumatic period for a bunch of people who overexerted themselves in the beginning of last year. And now we need to see how they're going to be able to handle those payments. All the people that tried to sell last year when sales volume were really low, will they try and sell again this year and add a whole bunch of inventory? There's a lot to kind of consider right now. And then this last article says that 1 in 6 Canadians say they're likely to default on a major loan as rates pinch. Okay, so this is really interesting. And they said in the next 60 days, 1 in 6 Canadians say that they're likely to default on a payment. And this was written February 14th. So that puts us into roughly middle of April that there's this anticipation a bunch of people will potentially be defaulting. Now, this article goes on to say that in the last edition of the Canadian Maru Household Outlook Index this morning, 1 in 6 Canadians said what we just talked about, which is up 2 percentage points from the month before and the highest level since they began tracking in 2020, which really isn't that long. But what they're essentially saying is this is a potentially very high volume of defaults compared to what we've seen since they started tracking this in 2020. Those are not the only sobering numbers. More Canadians, 12%, are saying that they will declare bankruptcy, which is 3%, which is up 3 percentage points from last month. Another survey by Statistics Canada found that 1/3 of Canadians, 35%, reported having difficulty making ends meet, with 26% saying they would be unable to cover an unexpected expense of $500. These are some very concerning numbers to hear, that this is saying 26% of Canadians, if they get hit with a bill that was unexpected of $500, like a car bill, like needing to pay for something, anything that's an unexpected bill of $500, it would make it very difficult for them to cover it. They're actually saying they'd be unable to cover it. So that's definitely concerning. A quarter of Canadians unable to pay an expected $500 payment. It's wild. Business insolvency filings in Canada rose 37% in 2022, which is the largest year-over-year increase in more than 30 years. So going all the way back to 1990, it's the most since then. According to the latest statistics from the Office of the Superintendent of Bankruptcy, consumer insolvencies were up 11%, rising 16.3% in the fourth quarter. So, you tell me what you think with all this information. Drop a comment below. Make sure you hit subscribe to these videos so you can see more content like this. This is very dry. We do all kinds of fun videos. Every once in a while, though, I just want to kind of sit and just talk with you about the notes that I'm taking and the way that I'm thinking, because I have a lot of these conversations with our clients one-on-one, and then people that I engage with where we meet and have phone calls. So my thoughts is this: if you are trying to hedge against inflation, okay, we're seeing inflation come down, which means that prices in general for home prices are likely to come down as well, because they're combating it with high interest rates, which means people can't afford to borrow as much. But my thoughts are this: if you're still looking for a place to park cash, you've got money in the meantime, and you're thinking, I'd like to invest in real estate, what's a great way to do it? Number one is, if you see something great that comes up that you're going to enjoy living in and owning for the next 5 years, go buy it. I think prices are at an amazing time to be buying. I wouldn't say wait for the bottom, because let's say the bottom is another 5, even 10%, okay? That would be $100,000 on a $1 million property. You can negotiate those kinds of prices right now because the market is so quiet. So if you see something you like, you can negotiate a bottom price today, which is better than waiting for the actual bottom, because if you just miss it, there might be a frenzy of activity, okay? And while I think it would be crazy for there to be a frenzy of activity, remember, I think it's Warren Buffett who's famous for saying that the stock market is like bipolar. It's like all over the place, and it's not something that you want to be relying on to be thinking logically about the market, because it's very volatile. So one of the hedges you can have is to buy pre-construction projects. This gives you really long closings. You can put some money down today, and you don't have to worry about getting a mortgage for a long time. There's projects in Toronto. If you're interested, just let me know and I can forward you, I think, 7 or 8 projects that we're working on right now that you can get access to. And the good thing about keeping your money in real estate is you can park it somewhere where, in some instances, these projects are as far as like 10 years into the future. So the good thing is you don't got to worry about a mortgage for 10 years on it. And in the meantime, you get to put your money somewhere where provided you've done the due diligence on the builders like we have for you, that you can go, awesome, I get to invest in something way in the future and not have to worry about payments for it for now, but I get to put my money somewhere that's like a forced savings account with a potentially very good ROI. And none of that's investing advice. It's just thoughts around what could you be doing right now to position yourself to come up with ideas to hedge against inflation, put your money somewhere productive. All right. Now, last thing to wrap up with today, and this is potentially going to be the most interesting thing. So here's what I'm going to show really quickly. Let's take a look at this right here. I want you guys to just see this because I see this all the time. And it's occurred to me that I talk about a lot of this stuff, but I haven't really shared it with many of our clients. So I want you guys to be able to see this. So here's an example. When we're talking about the market having come down some 30%, I want to give you an example of what that actually looks like, okay? Here's a home that was purchased in May of 2022, all right? Not even the height of the market, May. The height of the market was right here, February, okay? So this person bought this property over here in May, and the market's not even down. Looks like it's down 760 to 650, right? 650 divided by 750, so the market's down some 13.5%, okay? Here's what I want you guys to wrap your head around. This property there that we're looking at sold for that price in May 1.725, so $1,725,000, and it just sold last month for $1,325,000. That is a $400,000 loss. So in other words, if we go 1,325 divided by 1,725, there it is. It's a huge loss, right? So just gives you some immediate perspective that these are real numbers where people are losing money. And it's good to keep this in mind because I anticipate there will be more sales like this where people, for whatever reason, can't carry these properties that they picked up, because that's like a really fast, like that's 8 months or 9 months that this person had that property and decided to sell it for whatever reason rather than rent it out. Here's another example. This property, forget that one. This property right here. So here's an example. They picked up the property in May, same time frame, okay? And then they listed it very shortly after they closed on it. They bought it, realized they were in a pinch here. And by the way, I'm showing you all just Ancaster, kind of Hamilton stuff right now because I've been following this market really closely. And you can see that they turned around, tried to sell it, ended up renting it out, okay? So not an example where they lost money, but an example where people are buying stuff, overextending themselves, and then turning around. This is a property where someone's trying to flip it. They bought it for 1.2 in March. They're turning around trying to sell it for 1.6. This place has been sitting on the market now some 77 days, all right? And it is significantly overpriced. And that's my opinion that it's overpriced. And I anticipate that we'll see this property come down even more in value. And think about it, if they bought it for 1.2 and they put 200 grand into it, they're hardly making a margin on this after they pay capital gains, everything else. So it's pretty interesting times. And that's also not a sale price. Here's a really painful one. This property was purchased August 2022 for 1.45. Okay, it was closed on, purchased. Sorry, back in February. My apologies. This is actually back in February that they bought it, and they closed on it in August. I might have made that same mistake on a couple of these other ones. Let me just double back for a second. So this first property we looked at. Yeah, bought it in March. Makes a little more sense, okay? And it makes more sense because that's a bit of a higher market. Now, this last property that we were looking at, this one hurts, was purchased for $1,450,000, okay? They just turned around and listed it in the fall of 2022, all right? And they sold it in November for, what is that, $420,000 less than they bought it for. Unreal. So this is real stuff, guys. That's a huge drop in percentage. And then this property here, same thing. It was purchased at the very height of the market in February. All right. They bought it for $1,720,000 in February. They closed on it in June. They turned around and listed it very shortly after they bought it. Okay. And you can see here they held it all the way until they sold it over here at $1,265,000. Pretty wild stuff. Now, I'm definitely sharing this because I want you guys to have this perspective that at the end of the day, it's incredibly important that you're paying attention to what's actually going on. In other words, the market has absolutely dropped. Here's a whole bunch of examples of homes that were purchased for a whole ton more money last year, and they are actually selling for less money today. So it's not just a theoretical thing, it's a very real thing with homes. And for you, if you're going out and looking to buy, I mean, hey, someone was paying 1.7 for a house that today you can go out and buy for 1.2. All right. And if you're a buyer, now is the time to be making moves. You can go pick up properties that people were paying a ton for. And like I said, you can negotiate the deals now because I anticipate there's going to be more sellers who are in a position where they absolutely need to sell. So there's a little mid-month update for you guys in terms of what's going on in the market. It's not all doom and gloom. Be strategic, talk with myself, talk with your mortgage broker, have conversations about the market, what your best game plan is. If you're a seller and you're waiting for interest rates to come down, I would highly encourage you to have the conversation with mortgage brokers to understand what your options really are. And if you are going to be in a situation where you'll lose your shirt unless you sell, I would absolutely encourage you to sell sooner than later. Do not wait. Do not let the market go down further. If the market does bounce back a little bit in the spring, the challenge is you will be up against an incredibly high amount of inventory. So if I go over here and go to new listings, you can see, if I zoom way out, you can see every single April and May is the height of homes hitting the market. And you can see it's May pretty much every single year except going back to 2010 here. And I think there's maybe a year over here as well where April was the height of the market. This is COVID, by the way, and this was the year after. It was March. So the point here is that May, every single year, the most homes on the market. If you're going to sell, I'd encourage you to get that process started sooner than later, my friends. Hope you have an amazing month. Much love from wonderful Helen, my wife, and I. And I'm cheering you guys on. Take care.